The United Kingdom stands at a pivotal crossroads in 2025, facing not just a period of financial transformation, but a complete structural shift in how the country regulates, innovates, and invests. From regulatory overhauls under the leadership of Chancellor Rachel Reeves to the adoption of AI, climate finance initiatives, and consumer protection laws, the UK financial sector is undergoing its most dynamic evolution since the Big Bang deregulation of the 1980s. This isn't just about marginal improvements or digitization. It's about redefining the DNA of financial capitalism in a post-Brexit, AI-driven world. This video is your deep dive into how those tectonic changes are reshaping UK finance, the future of investing, and the global competitive position of London as a financial capital. Welcome to Hedge Haven. Let's unpack the next financial revolution. Let's start with the most immediate and arguably most ambitious set of changes: regulatory reforms tied directly to economic growth initiatives. Chancellor Rachel Reeves has made clear her intention to pivot the UK away from stagnation and toward long-term economic dynamism. That's not just political rhetoric, it's being implemented in law and policy. One of her flagship strategies is accelerating infrastructure approval timelines. Legal processes are being streamlined to allow major infrastructure projects, like the long-delayed third runway at Heathrow, to move forward with less red tape. This runway alone is expected to be operational by 2035, but it's more than symbolic. It's a keystone in positioning the UK as a logistics and travel hub, directly tied to trade and finance. Reeves is also backing the Oxford-Cambridge Growth Corridor, a stretch of infrastructure and development projects expected to contribute £78 billion to the UK economy. That corridor is being envisioned not just as a geographical cluster, but a tech finance education engine that could rival Silicon Valley. And central to funding these initiatives is her radical pension reform, unlocking over £100 billion in corporate pension surpluses and redirecting those funds into economic investments. This is the first time in modern UK history where pensions, once thought of as passive savings pools, are being weaponized as growth accelerators. Meanwhile, the financial services growth and competitiveness strategy is under active development. While full details haven't been released, early leaks suggest sweeping deregulation in some sectors to allow faster scaling of fintech, crypto custody services, and alternative assets alongside tightening rules in consumer lending and ESG compliance. It's a balancing act that tries to welcome innovation without compromising financial integrity. Speaking of ESG, the UK is positioning itself as a global leader in sustainable finance in 2025. The National Wealth Fund and GB Energy are now central policy instruments to unlock private capital for the clean energy transition. What sets the UK apart here isn't just government spending, it's leverage. These funds are structured to de-risk private sector participation. GB Energy, for instance, is offering co-investment opportunities where private funds contribute to renewable infrastructure, knowing the government backs the baseline. The Sustainability Disclosure Requirements, SDR, have been expanded to cover not only domestic portfolio managers, but also overseas fund managers marketing to UK investors. That means the UK is exporting its green finance standards and creating a ripple effect across European and even American markets. It's a classic case of regulatory diplomacy, forcing global finance to meet UK ESG benchmarks if they want access to UK capital. But the real cultural change is in the consumer mindset. 21% of UK retail investors now hold at least one sustainable finance product. This number is expected to double by 2027, showing that ESG isn't a niche anymore, it's mainstream. ESG indices, green bonds, and impact funds are not only growing in popularity, but also outperforming traditional benchmarks, thanks to strong regulatory incentives and risk aversion to fossil-heavy portfolios. Now let's pivot to the most disruptive force in the sector: artificial intelligence. As of 2025, nearly 75% of UK-based financial firms are actively using AI in core operations, with an additional 10% planning implementation in the next 3 years. This goes beyond chatbots or fraud detection. AI is now central to underwriting, investment strategy, regulatory compliance, and even real-time market analytics. Firms like HSBC, Barclays, and Revolut are leveraging AI to deliver hyper-personalized financial advice at scale. Imagine an AI system that monitors your cash flow, knows your risk appetite, compares global ETFs in real time, and adjusts your investment portfolio dynamically, 24/7. That's not a future vision. It's already in pilot mode for private wealth clients and soon expected to roll out across retail platforms. Risk management is the other side of the coin. Regulators are racing to keep pace. The FCA is working on a set of AI-specific compliance protocols expected to be implemented by 2026. These include explainability mandates. Firms will need to prove how AI arrives at financial decisions, and audit trails to trace every data point used in automated credit scoring or investment allocation. The competition for AI talent has also created a new sub-economy within UK finance. Firms are offering equity packages, remote-first roles, and even university partnerships to lock in AI expertise. The war for financial AI supremacy isn't just about algorithms, it's about who owns the intellectual capital. Next, we turn to digital payments and fintech. The UK financial services sector is growing at a compound annual growth rate of 24%, one of the highest among OECD nations. The market volume is projected to hit $127.3 million by 2029. And yet only 10% of the UK population currently uses open banking services. That represents both a challenge and a massive growth opportunity. Open banking, which allows users to share financial data across platforms with consent, is the foundation for hyper-connected financial ecosystems. It empowers consumers to aggregate bank accounts, budgeting apps, robo-advisors, and loan services in a single interface. The FCA's goal is to drive open banking adoption above 40% by 2027 through regulatory nudges and financial literacy campaigns. Security, unsurprisingly, is the biggest concern. According to recent surveys, 94% of UK consumers list data privacy and cyber protection as their top concern when using digital finance tools. This has led to an arms race in fintech security. Quantum-resistant encryption, behavioral biometrics, and AI-powered threat detection are becoming standard features in leading platforms. Now let's examine the evolving consumer protection landscape. Buy now, pay later. Lenders, once operating in a regulatory gray zone, are being brought under the Consumer Credit Act and full FCA oversight. This means affordability checks, full transparency on loan terms, and penalty disclosures will be legally mandated. These reforms are expected to go live by 2026, but companies are already restructuring their offerings to comply early and avoid reputation damage. Simultaneously, the Motor Finance Commission review is shaking up the car finance industry. After years of consumer complaints and misleading commission structures, the Supreme Court is reviewing historical cases in April 2025 that could result in massive restitution payments. If the court rules in favor of consumers, this could be the UK's version of the PPI scandal, a multi-billion-pound fallout for lenders. In a broader push for ethical finance, the FCA is introducing new non-financial misconduct rules across its entire regulatory code. This includes behaviors like bullying, harassment, and unethical decision-making, even outside the workplace, as grounds for disqualification from holding senior roles in financial firms. It's a cultural shift that draws from similar regulations in Canada and Australia and is expected to redefine the moral obligations of leadership in finance. Further tightening is happening around firms that hold customer funds, especially payment services providers and neobanks. Enhanced conduct and safeguarding rules are being rolled out that require clearer segregation of funds, real-time liquidity audits, and emergency response plans for system failures. These requirements are designed to prevent another episode like the Wirecard collapse, which shook European fintech confidence in 2020. But all of this change isn't without growing pains. One of the emerging challenges is diversity and inclusion. After years of pushing ethnic diversity and female leadership in financial services, many initiatives are now being scaled back due to budget constraints and shifting political priorities. Several major banks have downsized their DEI departments, raising concerns among advocacy groups and minority-led businesses. Still, the public mood hasn't shifted entirely. Grassroots financial platforms and fintech startups are increasingly building D&I into their core missions. offering multilingual interfaces, community-specific lending products, and inclusive UX design. In some ways, the pressure is moving from institutional to entrepreneurial channels. So what does this all mean for the future? It means that UK finance in 2025 is a paradox. On one hand, you have deregulation and AI-driven hypergrowth. On the other, stricter enforcement, consumer protection, and ethical mandates. It's a dual-engine model, scale fast but play fair. The firms that thrive in this environment will be those that can innovate responsibly, stay ahead of compliance, and serve consumers without compromising security or transparency. For investors, this is a golden era of opportunity. ESG funds, AI-backed investment tools, infrastructure bonds tied to national projects. These are not speculative bets. They are structured investment theses supported by macro policy shifts. For entrepreneurs, the future lies in open banking APIs, RegTech solutions, sustainable finance products, and secure digital wallets. And for everyday consumers, 2025 marks a transition to truly intelligent finance. The kind where your money, your goals, and your ethics align with the financial tools you use every day. This has been Hedge Haven, your deep dive into the future of elite investing and macro finance. Subscribe now to stay ahead of the trends shaping the wealth of tomorrow.